Well, the US dollar's found few friends in this market and sellers easy to come by. And that's had big implications for broad asset markets. But is this the time to counter? Clients seem to think that's the case. We've seen gold benefiting and pushing above 2,000, but can this kick and start to trend? We've just seen NVIDIA's results coming out. They've smashed expectations, as you imagine, but the market wanted to see more and the stock's down after hours. What does that mean for the Nasdaq? Well, Blake and I put that to the test and we ask once again, do we chase this market? This is the trade-off. Well, hi there. My name is Chris Weston, Head of Research at Pepperstone. I'm going to be joined in 2 seconds by Blake Morrow from Forex Analytics. And as always, we will be looking at the charts, which are front of mind, the key thematics, which are rocking both yours and my world, and all traders around there. So Mr. Blake Morrow, come into the programme, and this is a very seasonal show today because you're off celebrating Thanksgiving, so we've moved the show a day forward. So I hope you and the Morrow family are going to be having something good to eat, and you're going to be celebrating in Arizona there.
We will be. You know, it's a. This holiday is about giving thanks. I thank you guys. First of all, Pepperstone and Chris, I thank you for being, having me be part of this show. But
pleasure,
more
mate.
importantly, I thank our viewers. I thank our viewers really for always, chipping in, giving us a thumbs up, jumping in the comments, and being interactive with this show. So it's a time for being thankful.
Thanks indeed, indeed. Well, I hope you have a good and safe Thanksgiving, and we'll be back next week, and hopefully you'll be refreshed in that situation. But there's obviously a lot to talk about right now, Blake, and I'd like to pick your brain in Topical Thunder. We've just seen NVIDIA's results coming out, Blake. Obviously, a major part of the Magnificent Seven, and actually, I think 15% of the move or the variance that we've been seeing in the Nasdaq and S&P this year has been driven by that one stock, NVIDIA. Now, they have come out with numbers after hours, and the stock, if you have a look at their guidance for sales and also for guidance for data centers, I mean, once again, they've absolutely taken it to the woodshed and chopped it up. It's amazing. But, they've told us that sales in China are going to come down sharply. They're going to try and make it up in other areas. And look, I think generally speaking, we were waiting for the conference call because the CEO's a rock star when hitting the market in the sweet spot. But the market's priced to perfection here. I mean, we don't look at valuations with NVIDIA. Of course, we don't. It's just pure momentum play. But the market wanted something more. And, that's modestly weighing on futures after hours. But, the Nasdaq has been this huge momentum beast, and it continues to be so. We're just oscillating around 16,000 with the Magnificent Seven very much in there. Now, I will say that Amazon, there's talk that Jeff Bezos is selling a chunk of stock, and that's impacting there. But, in terms of what you've been seeing for price action, all these different stocks in there and what it means for the Nasdaq, last week we talked about the idea of chasing the Nasdaq. I said I was probably quite keen to do so. You were less hesitant. Actually, it's up about 70 basis points from this time last year, so neither of us are right. What are you doing now?
That's a great question. Now, first of all, I actually think Bezos probably saw our show last week. He realized that the Amazon's at the 618 retracement, and he knew that you guys were going to stick it to him. So yeah, he said I gotta go ahead and bail, which makes a lot of sense. But as far as NVIDIA goes, it's interesting. It's interesting. They have pulled the market higher. You talk about the magnificent. I can't even say it. 7. How about the Super 7? Anyway, they've been pulling the markets higher. But what we've seen is when some of the leaders have pared back in recent months or over the last year, you get a lot of rotation, and it ends up going from like tech into, maybe a higher dividend paying stocks, different sectors, whether it's healthcare or what have you. So, it is interesting to watch NVIDIA. It is, as you pointed out, priced to perfection. Stock had an initial dip and it was down like 2-3%. It's bounced back. A lot of people are worried about China. A lot of people worry about, the supply issues that they may have, whether they're going to be able to deliver on time. But overall, I think the stock is just hitting it out of the park. I guess the question is, am I worried about it, or am I worried about what the stock may do? You always have to be in this type of situation, especially when you have leadership that is really just taking the reins of the market. But what we've seen, if history is any guide, what we've seen this year is there's a lot of diversification, or portfolio diversification. Unless there's a reason that asset managers and institutions need to sell stocks because we're in a recession, which we're not in as of yet, doesn't mean there isn't one coming. Right now, I think it's status quo, and the markets are holding on to gains pretty well.
I just want to jump in before you move on to the next one. 2 points. Firstly, with Nvidia, forget about fundamentals. It's about the vision, and shareholders got to believe that other people are going to buy the stock. It's just a momentum tool. That's what it is. And so would I chase the Nasdaq and these stocks here? Absolutely, I would. I mean, I have no position in the Nasdaq right now. But if it starts pushing higher and breaking out with the rate of change, I'm going to jump in. I don't want to. I don't like it. I'm not an active manager. I don't have to compare my performance to a benchmark. Do I think it's going to happen? I don't think it's going to happen this time. But if it does kick up and that rate of change pushes up, and again you come into volume and bits and pieces, I'm going to chase that. Do I think it's going to happen? Maybe not though.
Yeah, that's a good point. Well, we're going to stay along the same themes, Chris, and we're going to move it to the next topic. We're going to talk about markets, and I think your title of last week's show was something to the effect of "Only the brave, get paid" or something like that, right? Did I get that correct?
That was completely wrong. No, you were wrong. I can't even remember what it is, but it definitely wasn't that.
Anyway, or markets compensate the brave, whatever. Anyway, skepticism doesn't pay, because if you want to talk about last week, I was a little skeptical, and the markets are up maybe over 1% since last time we met, which was last week, less than a week ago, 6 days ago. So, skepticism on my part didn't really pay to be a little skeptical, but there are some things that I want to point out that maybe it might be rearing its head a little bit here, and reasons that we might need to be a little skeptical. You said something when the show first started, Chris, that your clients are starting to bet that the dollar may rebound. Yeah, something like that. Okay. Yep. And you get a different view than I do of what, Pepperstone clients are doing. But here's the thing, we also, the dollar index found support right in the middle of the range at the 50% retracement. Copper, the Aussie dollar, I think the Kiwi did too, hit the 200 DMA, really rejected today. VIX is at its 2023 lows, showing some complacency. Bullish outside day on the US dollar, Mexican peso. If you saw the US dollar, South African rand, emerging market currencies got destroyed today. Yields look weak, and that means the bond market's a little firmer here. And a lot of people will say, well, maybe it's because, the dollar is going down. But I think bonds could be showing you maybe a different hand, that maybe they're going up because people are starting to reallocate into something that will pay them a guaranteed, a rate of return after this big of a run higher in equities. So what are your thoughts about the markets at this level? Because I'm still skeptical.
Yeah, I think you've come into this area now where the market's had a big move in the dollar. We're not sure, just keep it pushing it down. You're right, clients are net long, as they probably are across the whole retail brokerage scene, to be fair. People have seen that big move down. They're looking for a bit of a counter, a bit of mean reversion perhaps. But I think, you go into a lot of the Euro plays, Euro CAD, Euro Swiss, a lot of these pairs, Euro Stocky, they've all had these big moves recently. And they're just seeing exhaustion. So there's this kind of pause for reflection in a lot of the trades that have been working. A lot of the trend trades have just paused. We're seeing that in crypto, Bitcoin. We're seeing that in the Nasdaq. So after these, there's been money to be made in trends across the asset classes. We're just seeing this pause just to see what happens. So I think people have taken profits on a lot of those trades, and now we're just waiting for the market to reveal its hand. Do we actually get that counter move, or does it kick back up? So we're in this hiatus. We need the market to reveal itself across these asset classes. I will say that if you have a look at 10-year real rates, I think they're really important. 10-year tips, they're trading at 220 at the moment. They're right on the support. I think if that breaks down and the rate of change accelerates, that will be very positive for risk indeed. But I think, you're right. A lot of what we've been seeing is there's been some really big moves, some good money's been made, and now we're just sort of pausing. The other one that you want to look at, and I don't know, it'd be interesting to know how much it's on your radar, but it's definitely been on my radar, is the US dollar against the Chinese yuan, CNH. It's been in a ripping downtrend, and the PBOC have allowed it to happen. And it's a managed, the CNY is a managed currency, but you've seen that trend. And I think that a lot of the dollar flows that you've been seeing have resonated and stemmed from dollar CNH. So I'll be watching that cross very closely as well. So people are selling rallies in that, in my opinion. And I think that's a really important cross for markets.
Well, as we go into the next topic, I will comment on that as well.
Go on in.
So.
Hit me. No, okay, fine. We'll leave that next one. I want to say quickly that while I've got the mic, a lot of what's working, is that momentum. But the thing that I was talking about last week at Play of the Day was looking for some outperformance from Chinese markets, and that hasn't happened. I closed the trade pretty quickly for a small loss on that one, but it's been very disappointing. We've got some very good headlines, positive headlines about stimulus playing through. Market just doesn't want a bar of it. So, just really tough times for China in terms of their equity market. So many false starts there. Going back to the dollar turn, we talked about that dollar CNH there, and I think we can start with that one as well. But euro dollar pushed up into sort of 109.50. A few sellers kicking in there, as kind of we talked about last week. We were kind of expecting that. Dollar yen has been a really big mover into 148.10. Just seeing that move up a little bit now. The dollar index has been weak, and that's started to find a few buyers. It looks like consolidating. But I think dollar CNH has been right at the epicenter of that one. And I think that the fundamental reasons for this is that the US exceptionalism story has been queried. The right-hand side of the dollar smile has come into fruition, and that is that the rest of the world has sort of mean reverted. The US data has been worse than expected, or certainly CPI numbers. Retail sales were right, but some of the other data has shown a bit of a slowdown, and it's just caught up. So I think that's really the right-hand side of the US dollar smile has called into question there. But Blake, I've talked about the dollar for a while. So hit me with how you're seeing it.
Well, first of all, going to the U.S. dollar CNH, Chris, you pointed it out. It just a huge downdraft. Now we did, if you don't recall, throughout the summer we were in a very tight trading range. We did a simple range extension, and today the low today, and I don't have the quote right off the top of my head because it's not a currency pair that I follow that I'm trading all the time. But we hit that range extension low and finally found some support. So we had that move. Dollar index, 50% retracement. The euro dollar, as you pointed out, the 1.0960 is the 618 retracement. 200 DMA Aussie, 200 DMA Kiwi. You had the dollar Canadian that's holding up relatively well. The dollar yen showing some signs of weakness as we broke through like an ascending channel. We dipped right to 47, bounced right back to 48 and change now. Then you have the sterling, which sterling actually looks pretty damn good as we go into this autumn statement tomorrow. But I think the majority of the dollar selling has been done. However, we have PMIs that come out of the UK and the Eurozone, and that's going to be really closely watched on Thursday morning in Europe. Then on Friday, as we have a half day of trading in the US, we'll have US PMIs. So, you go back to that US exceptionalism story. Does it revive itself? Or, does European data, at least not get any worse and the US data continues to weaken?
I think the other thing, you make some good points there about these data points, and the manufacturing number for both the UK and Europe is going to be woeful. It's going to be less woeful in terms of consensus, but it's still going to be very woeful. It's the service numbers that you want to look at in Europe, UK, and the US, because if we see a deeper contraction in Europe and the UK, I think that's where you're going to get the concern in markets, and you see sterling sellers and recession callers up, and that's going to be the same in the US on Friday when we see the S&P global numbers there. You know, if the service numbers are expected to modestly expand just above that 50 boom bust level, but if we do see a 49 handle on it, I think the US dollar could come under seller. And before that one, in the session ahead, Blake, we've got durable goods numbers. That's the preliminary numbers. I said that well. And the market's expecting them to drop 3.2%. Now that does feed very strongly into the GDP, the Q4 GDP nowcast models, which are running around 2% at the moment. So the market's expecting a big decline. If it comes worse than that, then I think you see the run rate for GDP in the US coming under pressure. So I think I'm not expecting fireworks. Obviously, it depends on the outcome. But if I'm running dollar positions, that durable goods number could influence the tape.
Well, I'm glad you brought that up. And I mean, the dollar is the big story, and it's the market's going to be revolving around it, especially after such a big move that we've seen the last couple of weeks, for sure. But I want to take it to our next topic, Chris. I want to talk a little bit about the yen. And I know both of us actually brought some yen charts, which make sure you all stick around because I'm sure we're going to have a lot of talking about this with the yen. I did a quick, 1 minute video yesterday about about the dollar, or is it the yen? And Chris, it's not you, it's me. That's the problem. No, but that's what I was trying to point out is what we're starting to see yen strength, and it's not just the dollar yen. Yes, the dollar yen. It falls under the envelope of being a dollar pair. Everybody's like, oh, it's the dollar's really on the move. But if you look at like the euro yen, sterling yen, Aussie yen, New Zealand yen, Canadian yen, some pretty big reversals from some pretty big levels over the course of the last week. And I was reading because you talked about it last week, Chris. I said, fine, I'll sit down and read Goldman Sachs 2024 Outlook. Blah. So I did. And they're looking at, I think it was the second quarter of 2024 where, the BOJ is going to have to, wrap up yield curve control and start to tinker with rates. Anyway, the thing about the 6J, which is the yen contract, we also created this double bottom technically. So the thing is, I think 2024 is going to be the year of the yen. And I have a sense that you feel kind of the same way. What are your thoughts about the yen here?
If we strip everything to the bare bones and look at interest rate expectations for next year, what's priced into swaps curves by the end of next year, the market is saying that we're expecting 25 basis points of hikes from the Bank of Japan. Obviously, I think they've kind of already moved away from yield curve control. The RBA are probably the other outlier with the Bank of Japan, who there's about 10 basis points of cuts being priced in. But in the US, we've got 92 basis points of cuts being priced in by the end of the year. Europe, something similar. The UK, just a bit less. So most G10 central banks are expected to ease quite aggressively. But the Bank of Japan is supposed to do the opposite, right? So if this year's been the year of central bank divergence and carry, if you flip that around on a very simplistic level, you've got to say that from a central bank divergence trade, the Bank of Japan are going to be doing the opposite. So it makes sense to be long yen. But no, I don't think anything's ever that simple in currency trading. It really obviously depends on a lot more. But from a simple divergence trade, you've got one doing one thing and another doing another. The question is will the Fed live up to those expectations? Will they actually ease by the 90 odd basis points that the market's pricing in? We're going into a presidential election. I was debating with Mr. Michael Brown the other day whether that the election would have any bearing on the Fed policy. They're fiercely independent. Some people have made the connection that perhaps the Fed won't want to raise aggressively going into election. I disagree with that. I think the Fed will just set monetary policy by what they see. The question is from a divergence perspective, it definitely favours the yen, but that's very simplistic. The question you've got to ask yourself is what's being priced into the rates markets? Is that going to come to fruition? Have the markets become overzealous and therefore we've got to pare back some of that dollar weakness? I think that's the case. I do believe in the yen for 2024, but I also think that the market's got a little bit overzealous on the dollar pairings. I also believe that what's being priced into rates markets for the UK is fair. If not, there could be some further. They could cut more, and that could be the case in Europe. So, from a dollar, I don't think everything's going to be universally, but I think there are reasons to like the yen in 2024 for sure.
And before we move on, I being an American, being a boots on the ground American that I am, and with I got a guy from Australia and another one from the UK debating about presidents and whether they're going to put pressure on the Fed. And you guys don't know that. You guys don't know anything. Just kidding. No, but jokes aside, though, I actually believe the Biden administration, they could be as forceful as they want. It can affect the Fed's thought process. Now, do I think that if Trump was in office, he would have some clout with Jay Powell? 100%.
Well, he wants to get rid of Jay Powell. He wants him gone.
I know, but he absolutely 100%, in my opinion, push Powell around when he was in office. And I believe if he was here, he would be pushing the Fed around and demanding things. But I don't think the Biden administration, if they do, they'll maintain their independence.
I agree as well. Not being an American, well, we get to see things unemotionally from here. Unfortunately, your news is chucked around, but it does make it outside of the US, so we get to debate it.
I love just harassing you guys.
Anyway, let's go to that's the setup. All right, let's bring Dollar Yen up. What a segue. Let's bring we're very yen heavy today. And look at the candle there. So the price action guys or girls who are working off dailies would have seen the price action there. Big move for new lows. We rejected those. The buyers have stepped up through there. And the question is can it break through the day's highs? And obviously that signals a reversal. I like to see how it acts into that 5-day exponential moving average, which you can see is the sort of the blue moving average playing through there. Because you can see in these big, these sharp moves down, we do see that price is contained into that level. So that for me is the issue. So we've got a sort of an amber signal to suggest that perhaps the sellers have exhausted here and that there could be a change of control. We now need to see the buyers step in, create a higher high, and then I think you're going to see further short sellers who are going to be covering some of those positions based on that price action. But for me, I wouldn't be necessarily getting out those shorts until we can close on a daily basis above that 5-day exponential, because I think in these big moves down, you do see that confining. So we've got one signal to say, hang on, guys, this trend may be over, but we're not quite there at the moment. How are you reading this?
Well, I was just short the dollar yen as it sliced through 150 earlier this week. I just closed it out this morning, so I'm actually looking to sell. Yeah, it was a really quick and it was a good trade. I am looking to sell rallies in the U.S. dollar, Japanese yen. I don't know if the trend is over, but the one thing we do have to realize, the carry interest that you pay by being long yen and short other things, especially the dollar, it's expensive and it's costly. And so, you have to take that into account as you're trading counter this trend. I still look at it as it's trying to break down, looking for moves up to 149.5 to 150 to be opportunities to be on the short side. But I think you have to be I like to call it target trading, Chris. That means know where you want to be involved and wait for that price level. Don't skirt that. Just, if you say, hey, I want to be short, if we see 149.49 again, wait till we get to 149.49. And if it doesn't get there, you just move on to the next trade. So
yeah, it's an interesting one. So just summarize the way I'm thinking. We don't know if this trend's going to happen, but there are some reasons to believe that the sellers are exhausted. Now, obviously, price is what we trade. Let's wait for the market to reveal itself and jump on. So, we're not out of the woods on the downtrend here, but some reasons to believe it might be over. But we'll see what's happening here. So, definitely one that I think we need to keep on the radar.
All right. Well, I'm gonna take you over to the New Zealand yen, and once again, if you guys recall, I brought this trade up a month or two ago. I can't remember if it was my play of the day or it was a setup. Anyway, I made a little bit of money initially. Then, the Kiwi yen went ripping back up towards that resistance, and I lost money on the second half of my trade. But I'm giving it another whirl. Last week's high was at 91.20. And as long as we do not see above 91.20, I'm going to look to establish some new shorts here because I think it's a great setup. Any setup is a great setup for me when I can identify what the risk is. And I know above 91.20, I don't want to be short. Period. End of story. That's a multi-decade trend line. It's a big deal to me. We probed above it, did a false breakout thus far. So as long as we stay below it, I do want to be short. Now it's just finding that entry. And that's how I'm viewing the Kiwi yen. Plus, I think that with the New Zealand dollar hitting the 200-day DMA, it also sets up for decent Kiwi weakness moving forward. But what are your thoughts on the Kiwi yen here?
Yeah, I mean, there's definitely. I mean, I can imagine the scalpers are sitting there just feeding through, selling every time it comes into that resistance level and just picking up, 30 pips or so.
Yep.
But yeah, I wouldn't want to be short yet at the moment. It needs work. It really needs work. But when it starts coming off, I think that could be very, very powerful. When I look at a setup like that, a rejection off that, and if it starts, you bring up a rate of change. That's an indicator I'd be using just to have a look at, the rate of change on that, because it's the best momentum indicator you can have. And that starts accelerating to downside, I'll be jumping on that because it's a very powerful rejection. Right now, I wouldn't be doing anything. So it could break out, and again, that could be a very powerful statement in itself that it wants to push higher. But a rejection, and you see a series of lower lows with good rate of change, I think that could be a good indication that we're probably going down to sort of the 80 level as well. But again, with the Kiwi yen, it's been historically and typically it's been a really good risk proxy. So if equity markets start rolling over, you are going to get Kiwi yen following suit along with the Aussie yen and Mex yen and things like that. But it hasn't really been the case for a while. If you wanted safe haven flows recently, you've probably gone more to the Swiss franc or so. But the equity market needs to roll over. Vols need to pick up a little bit. So I couldn't tell you what the fundamental reason is here, Blake. The interest rate differential trade, is going to take a long time to develop. But right now, this is a chart you want to have up, but it needs a lot of work to convince me.
Got it.
What doesn't need a lot of work to convince me is gold. Let's bring the gold trade up because, we've seen big flows in this recently. And again, we've been talking about gold removing itself and going back to its sort of more typical fundamental drivers. It's obviously lost pretty much all of the geopolitical hedging premium that people have used and is now reverting back to watching the bond market and also the US dollar. With that weakness we've been seeing in the US dollar, that's clearly benefited gold in US dollar terms. And we've also seen nominal and real rates coming under pressure, or buyers coming through with yields moving lower. And we've seen that the correlation pick up between real rates and gold as well. So 10-year real rates below 220. I think gold breaks through those highs. But look, if we look at that, we literally pushed higher, came back to the 38.2% retracement to the T. Buyers stepped in at that level, and we're just testing those recent highs around sort of 2008. A break of that level, and we get the 138% extension of that level around sort of 2080 back into those kind of March 2022 highs. So I think it gets there, but it will take a weaker US dollar, and it will take further fall in real rates, and which neither of those two situations I'm overly convinced about. So we'll see what happens there. But the buyers at the moment seemingly in control of this. Blake, how are you seeing it?
First of all, you pointed it out, and I need to reiterate: the 38% retracement hold in gold is golden. Okay, I'll show myself out now.
Yeah, that's nice. Very nice.
It's
Shakespearean.
But no, that suggests that we have more upside. But here, I was having this conversation with my colleagues a little bit earlier about gold. The one thing that always keeps me hesitant is I'm not seeing silver breakout. And silver, 24.20, that's the level. We break above that, and I would be all about being long gold because I think gold's going to outperform silver. But I'm fearful that when you have precious metals, you want them moving together, especially gold and silver. I mean, some will silver will outpace gold in some situations, and vice versa. But in this case, silver is really struggling above $24. So if we get above 24.20, which is a long-term triangle resistance, symmetrical, we break above that and gold is breaking out above 2010. I think you're going to get that momentum trade right up to 2080, as you're pointing out. I think it looks bullish. I wouldn't want to be short.
Have you seen palladium? I mean, have you ever seen the daily or the sort of longer term time frames of palladium? That was down and out. Everyone was beat on that one. That's had a really nice rebound back into the recent highs. So yeah, that's had a really strong move recently. That's come back on the radar in terms of the movement. So that's another one that's moved up. But it's come into the similar sort of critical levels that we've been seeing there. So yeah, another one that's that should be on the radar.
Yeah, let them all move, let them all break together. But I think the momentum behind it is real and it's there. All right. Well, the last setup is actually not one of my setups. It's one of our viewer setup. Now, remember, if you have something that you want either Chris or myself to look at, make sure you get down below, jump in the comments. That's why I'm looking at the Nifty 50 today. This is the Indian market. And I wanted to talk a little bit about it because we had a question on how we feel about the Nifty. Now, Chris, I know that you don't really follow it that closely, but I'm watching it just because it's paralleling a lot of other markets. You know, we've had about a 6% rally when the S&P off of those recent lows rallied, 10%, 11%. You know, here in the Nifty, we were up about 6%, but we're coming into some really critical resistance. Now, the one thing that I've noticed is the RSI is higher than the previous highs resistance, which that resistance is around 19,870. So if we break above that and you see the S&P surging higher, you know, like especially over the next couple of days, we get into a little bit of a lull when volatility is down, markets just start to grind higher. We break above 19,870, that resistance, we might, you know, challenge these recent highs. So I like the Nifty here as long as we can break above that resistance. Do you have any thoughts on this chart, Chris?
I'd be going long ASX, short Nifty, just as a result of what happened in the cricket. So we'll see what happens in that one. I'm not sure if you followed that one, Blake, but I'm sure people out there did.
I don't, but that sounds like...
No, I think it's an interesting setup, isn't it? I mean, this is another one that needs work. And, you know, I think a lot of people are getting quite excited or have been very excited about the fundamentals in India recently, whether that sort of spills into a corporate landscape. But I think purely technical... you know, that top that we've been seeing, it's similar to what we saw in the downtrend in the Kiwi yen. You know, do you look to short it at these levels or do you look to go long? I mean, I think given that recent momentum, you know, what you're probably likely to see is that banging up against that ceiling quite a few times and then push through, whether it can close above that or it turns out to be a false close, I think is going to be really interesting. I think, looking at that, I'd probably, I wouldn't be doing anything right now. I'd let the market reveal itself. But I feel that there's the probability in this one is to the upside on a breakout and a continuation of this trend. We'll have to see. But that's the way I'll be trading that. And if it does break out of that level, then I'd be chasing that market, similar to what we're seeing in the Nasdaq.
Very good.
Yeah. Anyway, let's go to play of the day. All right, I'm gonna bring it into something that's a little bit more exotic, but let's bring up the cocoa chart. Now, if I came back in my next life as a chart, Blake, I'd want to come back as the daily chart or weekly charts of cocoa. I'm obviously not going to come back as the chart, but if I did, this is the one I'd want to come back as because, for trend followers out there, CTAs, anyone who wants to buy high and sell higher, this is a chart that you've just lumped into your max long this trade. It's been an absolute wealth winner. Your job as trend followers is to be is to get outliers. You're going to take a lot of small losses throughout the year. But when you get a trend, you jump on it and you hold it, and you use a trailing stop. I like to use a Keltner band, for example, or a Donaldson channel, which use a 40-day look-back period, which I've got on here, but something that keeps you unemotional, something that keeps you in the trade. And you can see here on a 40-day look-back in the Donaldson channel that you've stayed in the trade the whole way up, and there's really no signs of kicking up. But it's pulled back a little bit, but I'd stay this one. I think one of the things we want to look at into 2024 is idea about diversification in strategy. It's not just about a swing trading strategy or momentum or whatever it's going to be. Just when you master one strategy, fantastic. That's your job. But then look at other different strategies that can come through, because diversification in strategy, I think, is a really, really good way. And trend following is a really good way of getting that low correlation with other asset classes and other trading strategies. And if we have a look at the cocoa chart, I mean, it's doubled because of really, the effects that the El Nino patterns had on West Africa, and crop yields are very, very low in countries like the Ivory Coast, in Ghana, these these big cocoa producing regions. And as a result of that, you've seen a situation where cocoa's gone for. I think there's more in there. I think I'm staying into it. I haven't been given this stop signs, but my point here is, Blake, is get some trend following in your life as well. Once you understand the systematic approach, these are the things that they're very low touch. You can stay in them, and you don't have to work the system like you would do in a scalp or a day trade.
All right. Well, I tell you, that is a nice chart to reincarnate as, I guess, if that is what you have to do. If that is what you're forced to do after you pass away, that would be great. All right. So my play of the day is going to be the US dollar, Swedish krona, because we're in a secular trend. Get it? Secular trend. That was good, right?
It was good.
Do I win?
Yeah.
What do I win?
Today?
All right. So,
pun down.
Hey, one of the reasons why you look at this particular, I like to look at this particular trade is because, and why I actually bought it earlier today. As soon as I got up this morning, we hit 1042. We were trading at 1042. I picked it up, spun out of it around 1047 at 10.47. It's trading around 10.45. I already put on another little piece, and I'm looking for a bounce from this double top range extension completion, 78% retracement. But more importantly, the Riksbank meets on Thursday morning while I'm enjoying turkey. So reason why I'm going to get long some and short some Swedish krona is because I believe that we are going to have either a dovish hike, but more realistically, I think it's going to be a hawkish hold. I think they're going to hold rates, and the market's expecting a little bit of a hike. So they're going to get a hawkish hike. Market's going to be disappointed. I'm trying to get a head start. But if we can hold here above like the 10.38 level, and I can keep my stops nestled below there, looking for a bounce back to the 200 DMA. And that's going to be my play of the day, Chris.
Try telling your wife or someone who doesn't have the huge trading experience about a dovish hike or a hawkish hold. It really bizarre,
that we should spend a whole segment on that. And you know what, Chris, the funny thing is, maybe it's not so funny, is we are going to get a lot of dovish hikes and hawkish holds probably over the course of the next, give or take, 2 years.
Well, I don't know if there's going to be many hikes. We'll have to see, but you can't rule that out. Everything is on the table at the moment, and an open mind will serve thee well. Anyway, thank you, everyone, for watching the show today. Hopefully you've got something out of it. And obviously, if you've got any questions, do leave them in the box below. We'd love to hear what you have to say. Anything that you're trading, anything that you're seeing on your radar, any of the views that are sort of encapsulating your mind, put them in the comments box. Give us a like, and we'll see you next week for more of The Trade Off.